All right, so I got a question to everyone out there who watches the channel, all the members and supporters of the community here on Discord and here on YouTube, and maybe you are a first-time viewer and watching this video today. If you are someone that is probably getting burnt out in your, say, 40, 50, 60, 70-hour work week job, if you could find an opportunity to where you could make money, say, from home, okay, and create your own business and make say $2,500 just a week. Okay, some of you probably say, well, if I could just make $1,000 a week, then that'll be just as good. But that'd be like $250 a day. $2,500 a week would be $500 a day. So if you're someone that's in that ballpark on, you may want to stay tuned and kind of watch today's video. This is just surrounding trading futures. I know people come from different avenues and trade different markets. Some people trade stock options or options and forex, but I'm a futures trader and I trade using range-based charts. And I know there's a variety of strategies out there, and I talk a lot about the strategy in which I trade on a personal level, not just here on YouTube, but on our private forum or platform for all of our elite and ultra elite members who are supporters of the community here on the channel, which I'll talk more about in discussion of at the latter portion of the video. So stay tuned for that piece. But I just want to share with you like a simple way of going about making money, day trading. And you don't have to spend all day doing this. You can do it within an hour a day if you have half an hour. But I would say this, I would limit the number of trades that you're actually taking, because I see so many people out there who are taking like multiple setups, 5, 6, 7 setups. Let me give you this piece of advice. If you are doing that, you really need to focus in on taking 1 to 2, maybe 3 trades a day. But that's going to help minimize the number of losses or maybe even possible drawdown that you're taking. Because a lot of people, I'm sure, are probably going through the frustrations of ups and downs, like being in a trade, winning, next trade they lose, next trade they win. That seesaw effect. How you can kind of rid yourself of that is really in protecting your capital first and foremost. Whether you're trading with a prop firm or trading your own personal account, is just trading. Having taken just a minimum amount of trades, 1 to 2 setups. That's all I take pretty much on a daily basis. And I recommend you setting that up or putting that into your own trading plan. You stick to your rules. If you say to yourself that you're only going to trade 1 setup or 2 setups a day, then stick to that. All right. If you take 1 good solid trade, then be done for the day. If you take a losing trade, then you could possibly be done or look for another setup. But if you take 2 losing trades, definitely call it quits. And I talk about in tons of videos here on the channel how to go about securely preventing yourself from taking on major drawdown and preventing yourself from blowing your accounts at the same time. Trade management, risk management, you have to be wise in knowing where to get in, where to get out early enough in case the market comes back against you, just in case so you can preserve your capital. But with all that said, again, what I'm talking about is multi-chart confluence. Okay, using higher time frames and then scaling down or marking down from a higher range chart or higher time-based chart, whatever you use to trade with, and then taking your trades with opportunity off of a lower chart. Okay, again, lower base, that could be, for me, it's a 24 range. Maybe for you, it's a 5-minute or 1-minute chart. But all you need is just 1 solid trade, 2 solid trades, make a few $100s a day. So many people think, and they had the idea of getting into this business and trying to make it and get rich. Little do they know the real way to make it and survive in this business is compounding. That means whatever you made today, just do it in repetition of tomorrow. Not every day is going to be the exact same, but at the end of the week, you look at your account and then slowly grow it from there each and every month. It doesn't matter if you're trading the micros. It doesn't matter if you're trading the E-minis. It doesn't matter what market you're trading. If you have a solid strategy that's already working, just compound that account slowly and allow it to grow. That is going to secure the payouts, secure the deposits or withdrawals you take from your accounts, and be able to basically live off them. Now, a lot of you may love your full-time job where you're working at 40, 50 hours a week. There's nothing wrong with that. People do that every single day. People have full-time jobs and they also run a part-time business, or they day trade on the side, or they have something else going on to where they're drawing an income. If you have passion to trade, then this video could possibly help you out, because I'm just going to break down something that you could do and show you just a quick strategy that in which if you just took 1 solid trade a day, and I recommend trading the micros to start off with. Do not jump headfirst into the E-minis, but it's trading something that actually works. Okay. First and foremost, if you do not understand and know a thing about market structure, Even though I'm showing you a simple strategy surrounding confluence in on the charts, listen, learn, and understand market structure. I've talked about that and I stressed that a million times over in videos. It is the most important thing when it comes to trading, because without understanding the direction to trade in, then you're going to get things absolutely incorrect, and you're going to keep pouring back in trying to restart or reset those prop firm evaluation or challenges, just spending and blowing through money that way, or blowing your own personal funds. Okay, so like today, I'm going to show you a setup. All right, if the market is bullish, then look for bullish direction, look for bullish trades. Okay, if we're bearish, then you were looking for opportunities to only go short. When I see the market last few days, we were bullish to the upside up until yesterday. Then we reversed and had a transitional point to where we started to make lower lows and lower highs. So I would be only looking for opportunity to short yesterday. In today's trading session, we were making higher highs and higher lows, breaking structure to the upside. We took out this significant area right here, which I talked about in our private community to elite members today, because I posted a video on a trade breakdown, a trade that I took over on the Discord, and I posted today. I broke that down for the elite and ultra elite supporters of the channel. That's a private community. Again, I'll talk about it towards the end, but that's really where I go into detail about the strategy and the blueprint to the strategy and how it works. Look, what engaged me to want to take trades going long is because the market started with this bullish momentum and leg to the upside here, making highs, higher lows, breaking structure higher. As long as you have breaks of structure to the upside or to the downside, trade in that same direction. This is my higher range chart. This is the chart where I start everything and I look at, the market as a whole. And this is where I first mark my charts up in reference to help me, take a look at which way I want to trade. I don't start from a lower range chart. Okay. I'm only using my higher range and then scale down to my lower range. But because I see all this bullish momentum, meaning lots of bullish buy-in to the upside, I'm interested in going long. Highs, higher lows, breaking structure. Now, if you don't know what you see right here, this is a clear area of liquidity that was, pretty much being built up in the market. And I covered that in lots of videos talking about how liquidity is so important when it comes to trading. I prefer to see a liquidity run or sweep where the market is taking out an area of liquidity and then look for an opportunity to trade, because it's one of those things that where if you understand, the behind scene is in reference to what the market makers are doing, what the banks are really trying and institutions are really trying to do, is to form these liquidity traps where they fool traders out, like buyers, or you may see orders, offers hitting the books right here to try to push the market higher, but then sellers step in to push the market lower right here. And then you see where the market made a wick, came down, wicked above here. This is where liquidity is being stacked up in the market, and they love to run those areas. All right. So once the market eventually starts pushing back to the upside, buyer stepped in again, more liquidity, pretty much stacking up in this area right here, and then eventually run this area here where sellers stepped into the market. Then, basically sell stop orders were hit. Okay. Right at the tops right here. So as the market was pushing higher and took out this area of liquidity, that's the point where I'm looking for an opportunity to go long, because that's why I like using cumulative delta, especially at price, because you can kind of see those things with cumulative delta at price. I can kind of show you right quick. Let's just do this. If I was to hover over this area here with the micro range profile, and I'll bring this to the left here so we can see, kind of blow it up for you a little bit, or bring it out, and then we can look at it. So like right here, you can see these highs right here. There was liquidity right here. See all that green right there? That means there were offers hitting the books right here to push the market higher. The market failed and it pushed lower. Same thing when the market got up here, more buying, all this green right here. You see that? Then the market's kind of, pushed off to the downside again. So you have all this liquidity being in the market right here. So they're going to run that area. Okay. They're going to run that area and take out all these sellers up here in this area. And when they do that, that's when I'm looking for an opportunity as a retail trader to basically trade with them, because look, they set up a trap here, and then they run that area to take out all these sellers right here. Then this right here is telling me that they want to push to the upside, because they're already forming a channel right here. You can see it. Okay. Right there. And there's liquidity right there, which they want to run. They run it to the upside. This is a break of structure above these highs right here. I want to take the trade with them to the upside, because they're showing their hand that they want to push higher, and they create a liquidity pool, okay, where they trap traders at right here. And then the market goes up there and grabs all that liquidity. And this is the high probability setup area right here. I look for high probability zones on a higher range chart. Okay. Right here, this is high probability because we have an imbalance resting back at the zone. When the market gets to that area, that's when and retraces back to it, to a high probability area, that's when I'll look for an opportunity to go long. This is how, and you only need to take one of these setups a day. Okay. Now you could do the same and looking at a lower range chart or a lower base chart, but you want to make sure you're trading in the direction with the higher range chart. That's why I always start with my higher range and mark my zones up that way. Just like yesterday, this was a beautiful demand setup right here. Liquidity right here in this area here. The market ran it, came back, and then it broke above again. So that's what I'm betting on right here. Is for them to come back to this area right here, reject or react at this zone here, which is high probability, and then go back and take and run this high right here. Okay. Now this is a major high. This is a major low. They're trading in between this area, but we're looking for them to possibly come up and retest the high and take out the high right here. So first and foremost, like I said, get the direction correct in the market. Make sure you're trading in the trend or at any given moment within the area in which the market is moving with momentum. In this case here, to the upside. Look for an area where they're kind of building up liquidity at. And then when they run that area of liquidity, look, and then they form, as they're doing so in the market break structure, look in this case here, see if they make an area of demand or create an area of demand, or if the market's running to the downside. And we're doing the same thing in reverse. I'm just going to show you, like, we're like maybe moving like this, comes back, and then it kind of, maybe wicks out above these lows right here, and then it pulls back again, and then it finally breaks right here. Then look for an area right here where there is a supply at to continue moving to the downside. So maybe they pull back. This is maybe a supply area right here. Okay, supply means that the aggressive selling, demand is aggressive buying. It's aggressive buying right here, so that means I need to take my trade in the direction with the market. Aggressive selling right here, coming to the downside, look for a supply and go short. Looking for the market to run the lows that I just showed you at the end of this swing right here. Okay, this swing right here, come down, break the lows right there. Okay, so that's what we're looking for. All right. Basically, and from there, what I would do is I'll move down to my lower range chart, and this is the zone I marked up right here. Comes back, taps the zone here, and I will look for, at that point, to make it real simple and easy, look for where the market on your lower range chart or your lower time-based chart or ticker volume, look to where they're creating and breaking structure to the upside. Now on the lower chart and a lower range chart, and look for a demand setup to take the trade in the direction with the higher range chart. So it's just confluence and moving on the lower range chart with the higher range chart, but looking for the same exact type setups, demand setups, because we're moving higher. Okay, as simple as that. But that's what I want to share with you and show you, that I don't try to make things complex. Try to make in trading in general, just make it as simple as possible. The more you start adding to your charts, the more you try to make it complex, you're going to find that you're not going to be able to get into the trade and execute your trades at the moment you should be getting in, and then maybe you get into the trade too late and it comes back against you. That happens to most people, is that they could be up, a couple points, 5, 6, 7 points, and then the market comes back. They hold on thinking the market's going to run higher or lower, and they get stopped out, or they allow the market to run their stop. It's because they got into the trade too late. That's why I don't hold and put a lot of emphasis on indicators as a whole. I'd like to trade based on what I see on the charts, and trade pure price action. All right. So hopefully that makes sense. Now, if you want to become an elite or an ultra elite supporter or member of the channel, what that is a private community. Okay. That's where I go into detail about trade breakdowns, the setups that I take. The ones that I take, I post over on the Discord. Okay, so the community can see. And then I go back and I break them down in detail so that you understand, like, what I'm thinking, why I took that trade, what was my thought process. Just in general, what were we looking at in reference to structure? What were we looking at as far as where to place stop loss and where am I aiming for profit targets? Those type things is what I discuss on these trade breakdown videos. But you also receive the video playlist and the great video, which I think is about 45, 50 minutes long, covering market structure for anyone, kind of struggling or having a hard time with that concept. All right. So if you choose to become an elite member, that's what you get. If you want to become an ultra elite, you receive everything I just discussed, plus the live recorded trading sessions where I'm recording the caption, my trading sessions and the recordings now. And that's where I go into detail about structure again, analysis of what the market is doing and what it looks like in terms of my eyes and looking at the charts. And then you see me engage and take trades, and I break those trades down in the live recorded trading session form, or, form. or fashion, I should say. But anyways, that's what I show, and that's what you receive if you want to become an ultra elite. So you can either become an elite or an ultra elite. But again, that's the private community where there's tons of video content surrounding, the cornerstone blueprint to how I personally trade. Just using this multi confluence or confluence strategy. Okay, using a higher range chart, a lower range chart, and the purpose and reason why I use range charts is just because they're cleaner to the eye. Not a lot of big candles, small wicks, those type of things where it just makes things look so congested on like time-based charts. Not knocking anyone that trades them, but I'm just saying range charts are, for me, what I like to trade. And no, range charts and time-based charts are not comparable in any kind of way because they are calculated, the candles, differently. Okay, time-based is exactly what it is. It's the opening and closure based on the amount of time that has passed, and range charts are calculated based on basically the volume, the momentum that comes in the market. That determines how quickly that a candle opens and closes. All right, do we have a momentum? That's why when the market there's no volume, then you won't see much activity on the range charts because there's not enough volume pushing in the market. That's why, when it comes to the Asian market, a lot of people ask me, is it a good market to trade? I would definitely say to trade London if you can, get up during that time frame, or if you're someone that's maybe living overseas and that's a better time frame for you to trade, or maybe out west. But if you're here on the East Coast, then no. I mean, most of you anyway, unless you get up at 3 o'clock in the morning. But Asian session, I would say no, not so much because the volume isn't really there. And when the volume isn't there, then you don't really have anything holding the floor to the ceiling up, if you get what I mean, as far as certain levels. So the market could zip right through those areas you may have marked up on your chart because there's nothing there to hold it up. Okay. Not enough volume. But outside of that, that's all I have, guys. I appreciate it. Again, if you're interested in becoming an elite or an ultra elite supporter of the channel, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. Click on it. You'll see 3 tiers pop up. Make sure to choose the latter, one of the others, either the elite or the ultra elite. If you click on each one of them, you'll see the perks and rewards that you will receive, just as I discussed here just a moment ago. But that's all I have. If you're interested in joining the Discord, it's currently free. The link is down in the description portion of the video as well. But outside of that, that's all I have. And if you're not taking the time to go ahead and subscribe already, at some point during the video, please take the time to go ahead and sub. Right now, make sure to turn your post notifications on by clicking the bell. And last but not least, drop me a like on the video if you found some value in today's content. Take care. See you in the next one.